Good morning. This is Larry McMillan with the stock market update on Monday, October 6th. So pretty much everything's still the same. S&P plowing ahead to new all-time highs almost every day. It's had a little trouble holding the highs of the day, but it's still been making new intraday highs, new closing highs pretty regularly. And most of our indicators are still bullish. We'll review those. The S&P chart is the most bullish thing, of course, right now with it making a new high, as many new highs as it has. And so there's support at 6550 and 6500 and a lot of other areas below that. But I think if we fell below 6500, that might generate some selling, especially since October is sometimes a seasonally weak month, at least during the month, not so much at the end. The McMillan volatility band sell signal is barely clinging on at this time, so we only have two indicators which are bearish, and both of them are just about to be reversed. A close by SPX above 67.38 would stop out that sell signal. On a more positive side, we have buy signals continuing from the equity-only put-call ratios. There's been a lot of call buying accompanying this rally in the last few days. And so these ratios are trending lower, and that's bullish for stocks. The one thing that they are is overbought. They're in an overbought state, but that doesn't mean that that's a sell signal. It's just an overbought state. The market can continue to go much higher while it's overbought. The breadth of the market has not been all that great, and we've talked about this a lot in terms of issues, that is. But in terms of volume, advancing volume minus declining volume has been good, and that continues to be. This past week, we saw the cumulative volume breadth make new all-time highs right along with SPX. And that's measured both in terms of optionable stocks as well as New York Stock Exchange stocks. So it's kind of a different data set there, but both are confirming that volume breadth has been very strong. The new highs versus new lows indicator, that continues to be bullish as new highs outnumber new lows pretty easily almost every day. And volatility is low. I mean, that's an overbought condition too. But as long as volatility is low, that's not a problem. It's when volatility begins to increase that there is a problem. So, realized volatility on the S&P 500 is down to 6%. Certainly, that's overbought. But we wouldn't be concerned unless it rose to 10%. Then that would be a sell signal. Implied volatility in terms of VIX, that's also pretty low. VIX has been sort of creeping higher just a little bit in the last week. I think that's due to a certain amount of traders buying put options just in case there's something going to happen in October. They're not being too aggressive about it because realized volatility is staying very low. So they're really not paying up a lot for VIX. But, VIX has slightly increased over the last week. But that hasn't been enough to cancel out its major buy signal, a buy signal for stocks, that is, which we call the trend of VIX. And finally, the construct of volatility derivatives, that's positive for the stocks as well. The term structures are sloping higher, and the VIX futures are trading with a big premium to VIX itself. So all in all, it's a pretty bullish scenario. We mentioned that sometimes October can be seasonally a problem, but we'll see. If it doesn't decline at least 2.5% sometime during October, that's really not too unusual then. So I invite you to visit our website, take a look at our daily letters, and meanwhile, have a great week trading.